We'll be live in a moment. Hello and welcome. This is Sergio Marrero with our first session of the year for RBL1 Live. And we have a special guest tonight, Kate Brodock, who is CEO of Women 2.0 and general partner of the W Fund. Thanks for joining us tonight.
Yeah, thanks for having me. I'm excited to chat.
Yeah, excited to chat, and also, you're our first guest of the new year, so excited to have you and and dive in. But for those that don't know about Kate, Kate is a graduate from the Fletcher School at Tufts. I ended up going to grad school at Harvard University right around the way, and was interacting a lot with the Tufts folks there. Graduate of Emory University and also University of Rochester. Has a deep background in entrepreneurship, not only as a founder herself, but as a mentor, and has shifted into being a different type of founder, founding a fund. Excited to hear more about, if you could share with the audience a little bit about the W Fund.
Yep. So W Fund is an early stage tech. We invest into early stage tech companies that are led by women or underrepresented founders. We do have one portion of our thesis that focuses on if a solution serves a traditionally underserved market. As you can imagine, oftentimes that's overlapping with the type of founder that we're looking at. So when we say early stage, mostly seed, little bit of pre-seed, and then we do opportunistically do Series A. What I mean by that is, if a co-investor comes to us with a great deal or something like that, but we're not actively out sort of searching for Series A. So seed and pre-seed mostly.
Amazing. And for founders out there looking to see if you're fit, like what can you share a little bit on what size checks, and then also what types of startups in terms of industry? It doesn't matter what industry, or do they just need to be of a underrepresented background?
Yeah, great question. So technology first, that's the sort of first hurdle. And really that means sort of technology has to be the core of the innovation. So something, like an e-commerce site isn't gonna really cut it unless it's a super innovative take on what that sort of E part is. Technically and explicitly, we're agnostic. We do that purposefully because we just have literally deal flow out of our eyeballs. And so we don't want to necessarily put any boundaries on it explicitly. With that being said, we do have 4 little buckets that get us particularly excited. One of those is the concept of access. So if there's a technology or solution that is opening up access to something that a market did not otherwise have access to, that normally the hurdles are price and geography or something like that. That's exciting to us. So in that bucket would be a lot of your fintech solutions, ed tech, health tech, that type of thing. So really providing and getting out to people and markets. Second bucket is food systems. And that is a little bit of a catch-all for food tech, ag tech, and to some extent sustainability, sort of the whole Mother Earth to food to humans as a big unit and a system. Third is the creator and culture economies. So we have a couple of really cool companies in that space. And then the last is the future of SMBs, so small, medium-sized businesses. My partner at the fund and I have literally worked with like thousands and thousands of startups. And so small and medium-sized businesses are very near and dear to our heart. So those are the big buckets. And then check size, we are currently sort of halfway through our fundraise. And so our check sizes are reflecting that they'll still be increasing. Right now, for seed stage companies, we're generally writing maybe 150 to 250K checks. That will increase to about 300 to 500K. in a couple of circumstances when we can lead, and we will do that for the right founder, those will look a little higher, of course. And then for pre-seed, we're generally somewhere between 50 and 100K for pre-seed.
Excellent. But thank you, Kate, for sharing that. So can you, and for you, I know, you're an entrepreneur, gone investor. Can you share a little bit more about your story about focusing on, let's say, public policy, Southwest Asian, civilization, a totally different area of study, and then now shifting into being a founder? Can you share more of your journey into how did you become an investor?
Yeah, it's it's a little bit of a journey. So I'll start actually in college. So I majored in political science and history, and got a little bit of a bug for representation. I actually ended up, my history focus was African American history. And so just started really kind of exploring cultures in the world and that type of thing. And then I moved to Boston right after graduation. I was gonna go get my PhD in history. So I actually got a research position in the history department at Harvard, except it was only 10 hours a week. So I had to go find something else in order to like exist. And so I got a job in what is now the just huge startup little hub in Cambridge, Massachusetts, at a tech transfer firm. So it was right on floor one of what is now an enormous innovation center there, at when they were only one floor. And I completely got the bug. And so what happened is I had sort of added this business component. I had always wanted to go back to school for international relations, which I did. But what I didn't, at that point, what I didn't want to have happen was, at that time, Fletcher was very focused on sort of, as a graduate, you would go into NGO, government, nonprofit, public policy, that sort of space. And I really wanted to emphasize going into the private sector and doing stuff. So I added my MBA from Emory University onto that, in entrepreneurship and marketing. So I kind of shifted over in that direction, and then I just worked in startups. So I basically worked in startups ever since I actually graduated undergrad. So it was a pretty nice, when I then kicked back into startups as a practitioner after that, I was super involved in the community, did a ton of community work around gender representation in the tech and startup ecosystems, ran for a number of years a large global organization focused on that issue. We had about 60 chapters around the world. So really like blended it really well. And then 6 years ago, I was able to take kind of that practitioner route and the passion side of that, and combine it. And I took over Women 2.0, which is a for-profit, for-good company, originally out of San Francisco, started in 2006. And we do a whole bunch of stuff for women and underrepresented founders, and also focus on DEI and the ecosystem and stuff like that. So I've literally worked with like thousands and thousands of founders on pretty much everything on business growth, except writing out an equity taking check. So the VC fund was like, duh. Like, why didn't we do this 5 years ago? So it's a very, very natural addition to what I was sort of already had going on.
Amazing. And no, I did do a little reading to understand. You move from leading girls in tech to Women 2.0. Can you share with the audience a little bit about Women 2.0? Because I know you're also leading that as you lead the fund.
Yep. So Women 2.0 is, again, large global brand. It's been around since 2006. We have two main buckets. Probably about 75% of our work really is on the startup space. We've got a little bit that, generally targets the tech space. You could be a director at Google or whatever, but that 75% falls into two main buckets. We have a bunch of programming that focuses on founders. So we talk about representation through a gender lens, and we are expansive past that. So we have a lot of programming that's really for founders from any traditionally underrepresented group. So we have like accelerator programs, pitch sessions, all that good stuff. And then it's very important to us to also be focusing on the structure that these founders exist in. I mean, we can work with them all we want, but unless that structure is also moving in the right direction to be able to support them, we're not going to make the impact we need to see in a decade or 2 decades time. So we train women angel investors, we have a hiring platform, we do targeted DEI work on the ecosystem, and then we have a big media property out front that essentially talks about all of that. So that is pretty much Women 2.0.
Amazing. And can you talk about that leap? Many of the folks watching, some of them are already emerging fund managers, some are already in venture, but there are a few that they want to start their own funds. So what were the steps that you took in order to get off the ground and move from that early, from the fund deck to, okay, now we have capital to deploy? Like what were some of the tips there?
Yeah. So first of all, a fund had been in my brain for years. I just was sort of like having fun what I was doing and I didn't do it. And then I had a really good conversation with an advisor of mine, and it just sparked it. And I just said, all right, let's go. So my first step was, I felt pretty confident about my network in terms of fundraising. And I can get to that in a second. I definitely dove in and did my research, figured out how you run funds, how you do all the stuff, right? And talked to a bunch of people. I talked to a load of people who are already in this space. For Women 2.0, we have awesome advisors like Charles Hudson at Precursor, Monique Woodard over at Cake Ventures, et cetera. So I was able to have some really good conversations. And then I started looking for founders. I think I did know pretty early that I didn't want to do it. It's not that I didn't want to do it by myself. It's that I knew I could do it better with somebody else. And so I really talked to a lot of people that I had already worked with in the past that I knew could be that other person or part of the team or whatever. And so finally landed on my current business partner, Allison Capen, and she and I had done a whole bunch of community work in the past. She runs a similarly focused organization called Women Who Tech. They've been running for about a decade, focus on providing capital, non-equity taking capital to women-led tech startups around the world. So that was the step. And then from there, we figured out the model. We're on the rolling fund model. We were one of their first 10 pilot companies. And the way that we decided to do it, and this is because I probably have a better appetite for risk, or I don't know, something like that, maybe not risk, but I just started talking to people. I put together a prelim deck. I knew it wasn't perfect. And I made a huge spreadsheet. I literally went through all of my LinkedIn contacts. I made a huge spreadsheet of like anybody who I think would be remotely interested. I scored them. So I knew like my first wave of people that I could hit. And I just started. I said, hey, I'm raising a VC fund. Here's what it is. You know my work from the past. Want to talk. And so that's really how we kicked it off. And we're on like version 75 of our deck. So yeah, that's where we came from.
I love it because it's a very real thing. And I actually was talking to another emerging fund manager about exactly that. You said version 75 of your deck. Can you share a little bit more about that? Yeah. And I don't want to assume, but I know it's this iteration of yourself, the thesis, right? Like your hypothesis of how you add value, and then your audience, right? Can you share a little bit of that magic?
Yeah, And for anybody who's also just been on the founder side, it's the exact same thing. You know, you'll talk to founders as they go through fundraising and they're on version 75 of the deck. So really a large part of what I'll call fund upgrades were really being conscious of how people were receiving our message. Where in our phone calls were people really latched on or maybe needed more explanation? Where were people asking questions? Like what was resonating with people and that type of thing. So we really tried to work on it from that perspective. And the one big thing that we had to work through on that was this idea, and this is specific to fund managers, this idea of the fact that we were first-time fund managers and this was our first fund. And so the biggest thing the industry was telling us was that we had to have and display track record. And Allison and I had a small handful of angel investments, none of which had exited. And that was it. So we had to, you know, that was a big thing. We tried to sort of like, well, here's what we've done at our organization, all that stuff. And really, we ended up leaning into actually our work with the founders, as opposed to we have done this investing. Once we started to say, listen, we have worked with literally thousands of these founders, we know exactly what they need, etc., then that was like a lot more energy to the conversations. Like, oh my God, that's great. So that was one big thing we had to work on. But yeah, it's really listening and upgrading.
Excellent. And I know we spoke a little bit before we started tonight about just the venture in particular, right? And if you could share how the W Fund is doing this, but what are things we can do to really innovate on the model? You're focused on the rolling fund model. Actually, if you could share a little bit about how you ended up on the rolling fund and what is a rolling fund. Some folks may not know, but if you could share a little bit about that for those listening.
Yeah. Yep. So very quickly, the rolling fund model, it's been around for decades, but it was not very commonly used. And AngelList has basically revived it in the last 2 years. So what it is essentially each quarter is a mini fund. And then your LPs, your investors into the fund, will essentially subscribe to a certain set of quarters. And then they are exposed to the deals that you do within that quarter. So to us, this was incredibly attractive because we had a large pool of target investors who we knew this might be their first time doing venture. You know, they weren't ultra high net worth. They were like successful women, you know, that type of thing, where we really wanted to make it accessible, where you didn't have to write out a $250K check to a huge fund. But you could come in at 10K a quarter for 4 quarters, for instance. So to us, that was very attractive. The other thing it allowed us to do was two important things. Is we were able to invest immediately, because literally as soon as you are done with your first quarter, you can invest whatever money you made in that quarter. Boom, go. So like we got 50K in, boom, we made a 50K investment out. We didn't have to do, raise 20% of the fund. That helped us with our track record too, that idea. We could say, yep, we've already made investments. And then the last thing is it's slightly differently classified with the SEC. It's a 506C as opposed to B. And that allows us to actually publicly solicit, which means most funds, when they're fundraising, they can only actually ask for funds if they know that everybody in that quote room is accredited. Allison and I both have enormous networks of like successful women, people who followed our work. We have 50,000 people on our newsletter database. And that alone has been really awesome for fundraising. I can just put it in our Women 2.0 newsletter and boom, I have, 4 LPs. So, from a 1-week blast. So it's, that was, I think, really important. So back then to the original question of like innovating is one of the, in general, I feel that women and underrepresented fund managers, there are so many hurdles in place in the VC structure right now for them to get anywhere. Things are opening up in the past year, that type of thing, but it is the way that it has been functioning, it's nearly impossible. And you can see that in the numbers. So to me, that's an opportunity to break stuff. And because we literally, we have to break stuff in order to do anything. And so really thinking about the structure and how you can change it in a smart way, breaking stuff in this space still means you got to do the right thing. You got to have a pathway. You can't just make stuff up. So, so the first iteration of that for us was the rolling fund model. And then we have already started thinking about what we're going to be doing in our next fund or our next side fund or whatever it may be to just really get those different wheels turning. So that's sort of a long-winded answer to your question.
No, I think that's great. Like some of the points that you mentioned, leveraging, I would say leveraging your superpower. Think about the network that you already brought, activating it in a different way, using the rolling fund and it being a different model, right? And getting folks into the game, and really with that founder engagement and intuition, utilizing that as your competitive advantage, saying, hey, we've done this with, thousands of founders and the like. So that's great. For you as you think of the taking a step backwards at a higher level, what more do you think is needed in venture in order to increase access for these underrepresented founders? Like you said, the needle hasn't moved even with all the calls for investing in early founders. Yep. I think in terms of capital allocated hasn't changed all that much. If it all decreased, I think it's gone more to larger funds or larger investments. Yep. What as a founder, excited about breaking things. Where do we go?
I love this question because and this is the same response that I give when asked about on the founder side, how do we get more money to the founders at the system? And you actually alluded to it in your lead in there, Sergio. And the real thing that has to be moved is the traditional system and changing the mindsets in the traditional system. There is still 95% of the capital is still in the firms that were functioning 5, 10, 20 years ago. And they're still being largely run. And that landscape of decision makers in these firms is still largely the same. And those mindsets of where they invest their money, how they make their investment decisions, where they're going for LPs into their fund, who they're supporting as up and coming fund managers, the whole system. That is honestly the most important piece and unfortunately the hardest piece, but it's why we wake up and we just keep pushing. So
awesome.
So I love what we're doing. Yeah, I love what we're doing with the W Fund, but it really is a piece in a larger solution that needs to we all need to get to.
Amazing. So before we wrap, if you could share with the audience a little bit on what's next for the W Fund.
Yes. So with this fund, obviously we're fundraising. So we're, looking towards a Q3 close on that, which we're super psyched about. And then with this fund, we want to do a little bit more expansion internationally. We've made 2 international deals And definitely that's actually where I'm most excited as we look at the medium and long term is international. So we're getting our feet wet there. And then we actually don't necessarily plan to do the linear sort of fund 1, fund 2, fund 3. We'd actually are working to create a network of funds, and very specifically, what we like to do is think of every single piece of our fund that we can possibly use to impact the ecosystem from a mission standpoint. So one of those is there are so many amazing women and underrepresented professionals who are thinking about doing their own fund and would normally go out and try to fundraise themselves, which is brutal. And so if we can actually work with some of those fund managers as well and bringing them into our network of funds, sharing back office resources, all of that great stuff, that's how we would like to be expanding in the medium term, and really just bigger and better together. So that's, I think, yeah, that's probably, I think those are the two big things I think we've got in the future.
Well, thank you very much, Katie. And for those that tuned in just recently, this is Kate Brodock, who is the general partner of the W Fund. So thanks again for joining us tonight. For those looking to learn more about the W Fund and even potentially back it, the link is in the live stream notes. And thanks again for sharing a little bit of your story. So thank you, Katie.
Thanks for having me.